Hello everyone, welcome to our morning briefing. It's the last day of July, 31st of July, and actually it's a very interesting day ahead, as you already know, and as we are repeating again and again like the last week. Today we have Fed rate decision along with a press conference, and it is widely expected that Fed is going to proceed to a rate cut up to 25 points. Other than that, we have, of course, US ADP data, which is a good indicator for NFP on Friday. And last but not least, and actually the first thing that we're going to see is going to be released, is the European gross domestic product along with for the second quarter of 2019, along with the July inflation. So all these add further weight on the market sentiment, and especially the anticipation of Fed is what actually weighs on the market sentiment and adds pressure, as it seems, on the US equities and US dollar as well. So what we have seen overnight, though, is some mixed situation. From the one hand, we had some news, some comments from a Chinese editor saying that the trade talks are in a good path, so we might have a good outcome out of the trade talks today. So this actually helped a bit the Asia equities, during Asia session. But on the other hand, Trump criticism on China, some mixed earnings reports, and the comments from Politburo Communist Party for adding stimulus to property market is what added further pressure to the equities. Actually, the overall picture from equities is more to the downside, so a lot of pressure on equities. I also mentioned, so that's why we have seen dollar S&P 500 jumping higher up to 3,018, and now is currently to the downside on the anticipation of the Fed rate decision. So equities remain overall under pressure. If I zoom out a bit, we will see that it didn't manage to proceed to another higher high, but it flipped to the downside again. So I mentioned also earnings. So some disappointing data, earnings report out of Samsung, but on the other hand, we have seen Apple. Apple are actually releasing some very good reports. So it beat expectations regarding the revenue. That was based on the iPhone sales, iPad sales, and if I'm not wrong, also on the service it provides. So we had a 4% increase on the Apple share. Into the London Open, we see that is currently slightly lower at 208.94, holds support at the 20-period moving average. That's for Apple. Good data out of Apple. Weaker earning reports out of Samsung. So let's flip back to our majors, and I will start actually with Aussie, which was quite the mover of the Asia session. It was in a good, it had a good session, and that was because of the stronger than expected second quarter inflation data, beating expectations. So that's why we have seen this jump higher, trying to retest the 0.69, didn't manage, is still facing resistance at this area. So moving sideways the last 3 hours. So we're waiting and see. This is, of course, along with some weakness from dollar that we have seen overnight. So good second quarter inflation data out of Australia. And on the other hand, I would like to show you also Kiwi, because in contrast with Aussie, the worse than expected Chinese manufacturing PMIs, which keep still below 50, below neutral, so that suggests a very weak manufacturing sector for China. It's what actually drives Kiwi. So what drives Kiwi and why we have tracked Kiwi lower earlier in the morning. Right now, again into the London Open, it spiked slightly higher, trying to do a correction, but that doesn't seem to. It seems to be quite temporary, especially after all this decline that we are seeing. So it seems like a temporary correction with the momentum indicators holding below 50, below the neutral zone. So last but not least, let me go back to euro dollar, spiked above 111.50, resistance at the peak of the day 111.61, still small body candles in the hourly chart. Hold support above 20 period moving average, so that's it, quite neutral. And last but not least, I would like to have a look on the US oil as it jumped last night up to 58.40, and that of course was due to the larger than expected draw of private inventories. This is what supported oil along with the geopolitics as well, but this is what actually pushed oil up to 58.40 area. So for the rest of the day, resistance holds at this 58.65 area that we have spotted back in the mid of July. Two fractals over here, two latest up fractals over here. On the spike of this, on the break of this resistance, the next level to be watched is around 59 area. Support holds at 58, right around 58 area, which is also the 9 moving average, period moving average in our 1 hour chart. So take care. It's a very, very crucial day, Fed. And also I would like just to highlight over here, let me flip to the dollar yen, that is a very crucial day because not only because it's the Fed announcement, but because the rate cuts from the Fed have been already priced in the market. So that would be actually quite tricky because it was already priced in. So if that actually if we see actually this happening, like a dovish comment from actually rate cut proceeding up to 25 points, a dovish stance from Powell, this is supposed to actually make the dollar weaker, but the markets have already priced in the 25 points in cut. So we might see quite a limited volatility. So actually the focus should be on the press conference because the cut is already priced in the markets. So the press conference and what Powell has to say about the future guidance, about how they will proceed from now onwards, whether we have another rate cut on September, this will be the key the key event to be carefully watched. So it's not so much the actual rate cut, but the conference that will give us that will be actually crucial. So thank you for watching. Take care. It will be a very, very interesting day ahead, and see you later on. Thank you. Bye bye.